In the video today, I'm going to run a full demo for the Plants Abroad solution on SAP S/4HANA 2023. Welcome back to the channel and welcome to another video in the Value Added Taxes playlist. This is Abdullah Galal, and in the last video I explained to you step by step the business process of Plants Abroad in SAP with the accounting entries. So in the demo today, I'm going to use exactly the same example that I used in the business process video, that we have a company code in Germany and we are selling to a final customer in France. So if you have not watched the business process video, then you should stop this one, go watch the business process first, and then check this demo. Some important notes before we start. First of all, the demo today is on my AG SAP S/4HANA 2023 server, and anyone can get access to this system. You can go to www.galalconsulting.com/SAP-access to see all the details. The second point, in order to configure SAP S/4HANA to be able to run the Plants Abroad process that you will see today, I couldn't do all the configuration myself. This is an integrated process between material management, finance, and sales and distribution, and there are many configuration steps that were missing for me. This is why I posted on my LinkedIn page asking for community support, and this is the community power. So 2 people have volunteered. There is Dimitri, who has shared many useful documents and a lot of insights in the process that have helped me a lot in understanding the process and in running the demo. And also we have Christina, who is an experienced sales and distribution consultant, and she did many configuration steps related to sales and distribution. I have also created a channel on the Slack community for the channel members, where we all shared our insights and our thoughts, and we discussed the process and the different configuration steps. So if you are a channel member and you would like to see all the details of the discussion that we had and all the errors that we faced and the configuration that we did, then you can go to Slack and open the channel for Plants Abroad, and you'll find all the details. So thank you, Dimitri and Christina. Do not hesitate to visit their LinkedIn profiles and to connect with them. You are going to find links to their LinkedIn profiles in the description of the YouTube video, or you can also search on LinkedIn by their names that you see on the screen here, and you'll be able to find their profiles. So go ahead and say something nice to them. They did a great help with this demo today. The third and last point is I have updated all the configuration steps needed in order to run the Plants Abroad process in the configuration manual that I share with the channel members. So if you are an elite channel member or higher, you can go to the Google Drive and you'll find the updated configuration manual. And if you would like to get access to this configuration document and many other documents and the member exclusive videos, then you can check the channel membership program. I'm going to leave you a link here on YouTube, or you can also go to the YouTube channel and click on join that you'll find in the homepage of the channel. Now let's start with our demo.
Internal
Accounting entries in every step. The SAP Business Process Integration S/4HANA. The process I'm going to demonstrate today is exactly what I explained in the last video. So we have a company code in Germany and we are selling a desk to our final customer that is in France. The demo can be done on SAP GUI or SAP Fiori, but I prefer starting with SAP GUI. If you would like me to create the same demo on SAP Fiori, then please leave me a comment. And if many of you request this, then I'm going to create another video. Otherwise, I'll just create the SAP GUI video, and the same concepts that we do here apply to SAP Fiori, as you already know. I've already done multiple demos and explained many things on how to use SAP Fiori. So let's review quickly the process together. We have our company code that's in Germany. The company code is AG10. And for this company code, we have a plant that's in Germany, and the plant code is also AG10. And then we have another plant that's in France. The plant code is AG11, and this plant is also assigned to the same company code. So both plants are assigned to our AG10 company code. And then we have our final customer. The process will be first to do a stock transfer order from our plant in Germany, AG10, to plant AG11, and then to do a sales order from plant AG11 to our final customer. And this will follow exactly the same steps that I explained in the business process video with the same accounting entry, and we are going to confirm all of this. Also through the process, I'm going to open multiple reports so we can see the impact of what we do on the inventory management reports and also in financial accounting reports when needed. Now let's start with the first step, which is creating a stock transfer order. This is a special kind of purchase order, so the transaction code is ME21N. I have already demonstrated these transactions before in the procure to pay process videos, so you should be familiar with them. But anyway, I'm going to explain all the details related to the Plants Abroad in detail. So first here we are going to choose stock transfer order or stock transport order, UB. This is a standard configuration by SAP, so it exists in any standard system. So we're going to use UB, And then here we have the supplying plant. We are transferring the product from plant AG10 to plant AG11. So the supplying plant is AG10. And then we have to insert a purchase organization, a purchase group, and a company code. So the plant AG10 is assigned to company code AG10. And then here we insert our material code. So the material I'm using today is desk M1. This is a standard finished product material that I created in the different views. So we have accounting, costing, sales and distribution views, and so on. And also this material already has a cost of 500 EUR per piece. Let's check the material master data together so we can also see this. So /O MM02. This will open, or MM03. So this will display the material master data. And here I'm going to insert desk M1. So this is the material I'm using today. And I'm selecting the basic data, sales organization data 1, 2, general plant data, purchasing, because now we need to maintain purchasing data also, and general plant data storage 1 and 2, accounting 1 and 2, and costing. Let's go. So the plant is AG10, and this product is also, or this material is also maintained in AG11 because we need it in both plants. So AG10, and then the storage location I'm using is G01A. Sales organization is AG10. Distribution channel is intercompany IC. So now if we check here and go to accounting 1, for example, so here we can find the valuation class. So this is a finished product. And then as you see here, we have a standard price of 500 EUR per piece, which is also translated to 560 USD because I have parallel currencies in my company code. So the standard price or standard cost for this material for our company code is 500 EUR, exactly as we saw in the business process video. I'm using exactly the same steps with the same numbers, so this way we can easily understand the accounting entries. Now let's switch back to the stock transfer order or the purchase order. Now I have inserted the supplying plant, the purchase organization group company code, the material, and here the PO quantity. So I will say 1 piece. And then here we have the plant. So the plant is AG11, and this is the receiving plant. So here we have the supplying plant here, and we have the receiving plant here. Then enter. And storage location is also G01A. So this is the storage location where I'm going to receive the product. And in plant AG11, I also have the same storage location code, G01A. But of course, the storage location for plant AG11 is different from the storage location of plant AG10. But I'm using the same codes. So here we have the storage location, and we are good. So here we have just a warning that the delivery date is hard to meet because I'm saying that the delivery date is today. And normally this material would require multiple days to deliver, but this is fine. It's only a warning message. So I'm just going to save. Before we save, let me show you the different details. There is nothing in special I want to show you, but let's just scroll through the different tabs. So here, if we go to delivery invoice, this is the header, we will find nothing. Let's go to the item details. So now I'm going to close the header and close also this. And here we have the item details. So we have the material data, material group 01. And here, if we go to quantities, we have 1 piece. And here we have the net weight and so on. This is coming from the material master data. If we go to the delivery schedule, it will show that we have the delivery date 10/10 and the scheduled quantity is 1. Now let's go to the delivery. So here we have nothing in special conditions. Here we have our valuation price. So this is coming from the standard cost. And as you see, it's 500 EUR per piece. And then if we go to shipping, and here we have the delivery type, shipping point, and shipping condition. The shipping point is very important because if it is not filled here, then you will not be able to create the outbound delivery. And this is determined automatically from configuration. So if I switch quickly to my configuration manual, here, if you go under plants abroad, I have maintained how to determine the shipping point. So if we go down, here we have defined shipping point for AG10 and shipping point determination. So the shipping point determination is in transaction OVL2, and it's determined based on the shipping condition, loading group, and the plant. So for shipping condition 01, loading group 001, and the plant AG10, the shipping point is G002. So if we switch back here, this is why we have this shipping point. Most of these details are either coming from the material master data or coming from the configuration as we saw now. And then we have here also the sales organization data, so AG10, intercompany, and 01. Now, when we transfer the product from AG10 to AG11, it is like doing a sales order. So these are determined automatically for intercompany, and they are determined based on the configuration. And this is all what I wanted to show you here. So let us now save this order and take the order number. So we have messages issued because of the warning for the delivery date, which is fine. So I'll just click on save. And here we have our stock transfer order number. So I'm going to copy this. And now let's go to the next step, which is creating the outbound delivery. We are creating an outbound delivery with reference to a purchase order now, which is a different transaction from when we created with reference to a sales order. So let me show you where you can find the transaction. This is the first time I show an outbound delivery for a purchase order, I believe, on the channel. So here we go to logistics and then logistics execution, outbound process, goods issue for outbound delivery, create, and then we go to collective processing. And here we have VL10B, purchase orders. So we open this transaction, and here we insert our shipping point, G002. And this is all what we need to do. I can also insert different selection criteria. If I want, I can also go to the purchase orders and insert my purchase document. But anyway, I don't have any other documents. So let's just execute. And here we have our purchase order. If you're not able to find it, then you should also check this date. So delivery creation date. Because if you are in the purchase order, if you said that the delivery is to be created, for example, after 1 week, then you need to search in the correct delivery creation date here. Otherwise, you will not be able to find your outbound delivery or your purchase order. So here I'm going to execute again. And here now this is telling me that we have one stock transfer order or one purchase order that is pending an outbound delivery. So I'm just going to select the line and then click on create in background. And this will give me another line that's green. So now I don't have any issues with the outbound delivery. And here we can go to see all the details by going to log for delivery creation. And here we select the line and go to documents. So this will show us the outbound delivery number. So now the outbound delivery has been created and there is the number. So we can proceed and post the goods issue. Now let's go back to the SAP menu and go to the transaction to change the outbound delivery. So now close create and open change. We go to the transaction VL02N, insert the outbound delivery number, enter. And here is our outbound delivery that has been automatically created in the background. So here we have the material, delivery quantity is 1. So this is a standard outbound delivery, same as what we do for the sales order. So we need to insert the picked quantity. So here we have the delivery quantity, which is 1. And then we need to insert the picked quantity. So this is also 1. And we have all the details are determined here, so we can see what is our plant and what's our storage location, as you see. So plant is AG10. Storage location is G01A. So this is the outbound delivery plant. So this is where the product is leaving from. Now I'm going to save. Before we save, we also click on post goods issue. So this way we can post the goods issue from here. So click on post goods issue. And here we are going to see our first accounting entry. Now the goods issue has been posted, and to see the details of the accounting entry and the material document that has been posted, we can go here to the history of the outbound delivery, so the document flow. And here we have our purchase order, then we have our outbound delivery, and this has created a picking request and a transfer to stock in transit. So this is our material movement, which also has an accounting impact. So I'm going to select the material, the document, and click on display document here. So this will show the material document. Here we have, it is similar to the outbound delivery, but this one is the material movement. So here we have also the movement type 641. And this is direction is negative. So this is issuing the product from the plant. And if we go here to document info, we can find FI documents. So click here and this will show the accounting documents. So double click on the accounting document number. And here we have our first accounting entry. So as you see here, we have a credit to the first line is a credit to the FG stock. So this is the stock, the inventory account in our trial balance. So this is a credit of 500, which is our standard cost of 1 unit. And this is assigned to plant AG10. And then we have a debit to the same account, 133000, also the inventory account, for 500, so the same value, and this is assigned to plant AG11. So you see the accounting impact on trial balance is 0, but now finance is reconciled with material management, because in material management we said that we are moving some materials from AG10 to AG11. And as you see, both plants are assigned to the same company code, AG10. And the only way we can have this is by activating plants abroad. So you cannot have multiple plants in different countries assigned to the same company code, except if we have plants abroad. So here is our accounting entry, all good. Now let's go back and continue our process. So now we have posted goods issue. Before I continue with the goods receipt, which is the next step, I want to show you the material management reports or the inventory reports, so we can see how we are able to track the stock. So now to display the stock details of any material, we can use the report MMBE. And here you can insert the material code, so disk M1, and I'm not going to insert any plant or anything, I'm just going to execute. So this will show me an overview of the stock of this material in all the different plants and in all the different storage locations. So here we can see that we have in all our company codes, in all our plants, we have the unrestricted use quantity of 295 pieces. And then in AG10, in storage location G01A under AG10, we have 178 pieces. And in plant AG11, in storage location G01A of plant AG11, we have 117 pieces. You can also see this in order stock is 3. So this is what I wanted to show you. So now there is other test data on the system, so it will not show exactly what we did now. But the 1 unit that we just issued from AG10 to AG11 is actually displayed here on order stock. So it has not yet been moved to unrestricted use because we have not yet received it in plant AG11. So now let's proceed and post the goods receipt. So I'm going to switch back to our material document. And now let's go to the transaction to post a goods receipt, which is /n MIGO. Very famous transaction that I have shown 100 times on this channel. So goods receipt MIGO, here we choose goods receipt, outbound delivery, and we insert our outbound delivery number. Enter. So this will show that we have 1 unit that needs to be received and the movement type is 101. So select OK, and also you can see all the details. So here we have the storage location. So this is G01A, this is the description of the storage location. And we have the vendor, which is AG10 plant. So this is showing that this item is coming from AG10. What other details do we have? So this is it for, here we also have the plant and storage location. So the plant where we are receiving is AG11 and the storage location is G01A. Now let's proceed with our posting. So click on post. And now we have posted our goods receipt. If we switch back to MMBE now, so let's switch back and refresh the report. Now we only have 2 pieces in the on order stock because we have just received 1 piece that moved into the unrestricted use of plant AG11. So this is just to show you that we at all times we are able to track what we moved from AG10 and what we need to receive in AG11. So now we have received this item. Let's go back to our material document and display it so we can see the accounting entry if there is any. So enter and go to document information, FI documents, and we don't have any accounting documents here. Why? Because as explained in the business process video, the accounting impact has been posted once when we did the goods issue. So there is no other accounting impact needed when we post the goods receipt. Now the next step is the most important one, which is posting the plants abroad billing document. And this is the most complicated step that took a lot of configuration because this is where all the work happens actually. Now let's go back and open the transaction to create a billing document, VF01. So the standard transaction that we always use to create any billing document. But here in the billing type, we need to choose WIA. So this is a standard billing type configured by SAP in the standard system that is made for the plants abroad. And you can choose to use it or you can copy it to your own, but this is the best practice for the plants abroad solution. So now I have WIA and here I have the document number. This is our outbound delivery, and then press on enter. And there is our billing document. So we have one line item, 1 piece of disk M1. The payer is 221. So this is company, this is plant AG11 for company code AG10. Now this is a customer account. So in order to be able to actually create this billing document, you need to create a customer account for the plant that is receiving the product. And there you maintain different details. You can find all the details in the configuration document. So here we have our customer. And if we go here to the header details, let's just go quickly through the document. So we have the billing date, company code is AG10. So everything is happening in the same company code. Document currency is EUR. We have here the account assignment group customer, which is coming from the customer master data. And here we have the Incoterms and the pricing procedure. This is automatically determined based on the configuration. And this is very important because it is also, so this is also configured by standard in SAP. It has certain conditions that we can maintain, but Christina has helped me in copying it into another pricing procedure that has that can determine automatically the internal cost of the item, so the 500 EUR, and then use it as a price. Thank you, Christina. So here, this is the pricing procedure that we are using. And also you can find all the details in the configuration manual on how to maintain this one. And here we have the VAT registration number. So this is coming from our plant. So this is very important. So this is actually the reason we are doing all of this, right? So although our company code is in Germany, we have a virtual plant that is in France. And in this virtual plant, we maintain our VAT registration number for France. Because, even though our company code is in Germany, in EU, if you are going to sell something to France, you need to have a registration there. So this is our VAT registration number that we are using in France, and we assign it to our customer, and we assign it to the plant configuration. And here we have the country region sales is France, so we are selling to France. So this is actually very important. And here we have the sales organization AG10, intercompany, and 01. So this is again determined automatically, and this is what we saw also in the purchase order or in the stock transfer order. Now let's go to conditions. So I don't want to show you the conditions on the header level. Let's go to the line items. So this way we can see all the details. So now I'm going to switch here to line items and go to the details. If we go here to conditions, and here we have the different conditions that are in our billing document. And this screen is very important. This matches exactly what I explained in the accounting entry of the billing document in the business process video. So in order to understand this, I really encourage you to go and review again the business process video and see this part, because here it can seem complicated, and actually it is. Every time I look at it, I need to slow down and look into the lines to understand what's happening, okay? So first we have our price. Now we are transferring some products from Germany to France with the same cost. We don't want to have a margin here. It is just moving the same cost from AG10 to AG11. This is why this price is equal to our standard cost and is determined automatically thanks to the configuration that Christina did. So this condition is a Z condition, which means that it is a condition that we configured ourselves, and it copies the standard cost from the material master data. So here we have 500, and this is the base that is used to calculate all the different values of input value added tax and output value added tax here in the conditions and in the accounting entry. So this is very important. And this is needed in order to be able to report our value added taxes to the government. So the second line we have is, so these are the lines that we have for the taxes. But before we go into the WIA conditions for taxes, let's just look into the R1 condition, so 100% discount. So now again, we are just moving the products from AG10 to AG11. There is no actual sale, so we shouldn't impact our sales revenue, right? But we need these lines to be able to calculate the value added tax. So the sales revenue line is both debit and credit, so the net impact on our trial balance is 0, and we have seen this in the business process video. So this condition is actually what reverses the sales revenue. So the price condition gives a credit to the sales revenue account, and the discount condition gives a debit to the sales revenue account with the same value. So you see here, this one is 500, this one is negative 500, and then we end up having 0 impact on our sales revenue, which is needed. So now we understand ZPR0 and R11 and R100. Let's just deselect them. And now let's look into the WIA conditions for taxes. First, I'm going to start with WIA2, which is output tax departure country. So now the departure country is Germany, and we are moving products from Germany to France. And this is an export business according to EU regulations. Germany is doing an export, so there is no value added tax here, 0%. This is why here the value added tax is 0%, and the amount is also 0%. Now the second condition and the third condition we have, WIA3 and WIA1. These are for input tax destination country, which is France, and the output tax destination country. Now France is importing from Germany. When we do an importation in EU, the country that's importing will do something that's called the reverse charge, which means in the same entry, we are going to debit and credit the input tax and the output tax. So both of them, so they net each other to 0, but this is needed in our tax reporting. So the net impact is 0 here. There is nothing that we have to pay to the government, but these lines will all show in our value added tax reporting, and I will show you this in our reporting in SAP after we are done with the process. So now we have these two conditions. One of them is for 20% and the other is for negative 20%. So this one is 100 and this one is negative 100. So this is input tax and this is output tax, and both of them are for France. Now these are the conditions that we have. We can now go to item detail again, and there's nothing here else that I want to show. Let me just confirm. So here we have our sales document, we have our outbound delivery, we have our plant AG10 and the division 01. So this is the plant that is selling, and the account assignment group for the material is trading goods. This is important, it's coming from the material master data. And we have the profitability segments, destination country. You see here we have destination country is FR, sales organization of order AG10, distribution channel IC, and division 01. Now let's save this billing document and check the accounting entry. So the document has been posted. Now we can display it. Go to accounting. We have an accounting document. And here we have our accounting entry, which is exactly similar to what I explained in the business process video with the same numbers. So first of all, the accounting entry is posted to company code AG10, which is in Germany. We don't have any other company codes. And then here we have the first line is accredited to sales revenue account for 500, which is our price or our standard cost. And this is with tax code Z1. This tax code is assigned to Germany in my configuration, and it is a 0% tax code. That is why there's no tax that is posted for Germany. And then we have here a debit to the sales revenue account. So this is our discount condition for the same value, 500. And this one is assigned to our tax code for France. So this is showing that we received some items in France. And because of this line, it has F1 tax code, which is 20% for France. This is why we have this value added tax posted. So we have output VAT and input VAT. Both of them have the same value, but they reverse each other. So output VAT is negative 100, 20%, and input VAT is positive 100, 20%, and both of them are going to the tax code of France. So they are netting each other off. The impact is 0, but in our tax reporting, we are going to see all of these entries. Now let's go to our tax reporting to see the impact of all of this. I'm going to open a new screen. And here go to accounting, financial accounting, general ledger, information system, or go to reporting, tax reports, general, and here we have advanced return for tax on sales and purchases. And we can use this report, advanced return for tax on sales and purchases. Now, once we activate the plans abroad functionality, we are going to have a new field here that's called tax reporting country or region. So this field is only added when we activate the plans abroad. Before this, you're not going to find it. So here we have our company code first, which is AG10. So AG10 is in Germany. If we leave it like this, SAP is going to report in everything that's in AG10. But now I would like to generate our tax report for France. This is the whole reason we have tax abroad, right? Plans abroad. So we can generate value-added tax reporting in the currency of France and for the entries of France. So here I'm going to choose AG10 company code fiscal year 2024. And here in tax reporting country or region, I'm going to choose FR. We need to insert a posting date, so I'm going to insert today, 10/10/2024. And here I have selected output tax, and the input tax. Now let's execute. Here first we have the output tax line items. So for company code AG10, month 10, year 2024. Here we have the document number, and then we have the tax code for France. This is an output tax. So here we have the tax base amount 500. Output tax is 100 because it's 20%. So the output tax that we need to pay is 100. Then if we go down here, we have input tax. So then we have output tax totals, so ignore this one. And then we have input tax. In the input tax, again, we have the company code AG10, same period, date, same document, but this time it's showing with tax code F1, we have tax base amount 500 and deductible input tax is 100. So we have input tax 100. So here we have a negative 100 of output tax and a positive 100 of input tax. So the net to be paid to the government is 0. There is nothing to pay. But we can see all of these lines in our value-added tax reporting, and this is what's needed to comply with the EU regulations. Now let's switch back and run the same report for Germany to see what we are able to report there. So here instead of FR, I'm going to insert DE and execute again. Here we have output tax line items. So for AG10, month 10, 2024, the same document, we have Z1 tax code. So this is the German tax code. And as you see here, we don't have the F1. So for the same company code, we are able to generate different value-added tax reportings for the different countries, and this is what's needed. So here we have the tax base amount is 500, output tax payable is 0, so gross amount 500 and output tax is 0. So there is nothing to be submitted to the government, and this is exactly what's needed. So we can see the lines, so we can use them to report to the government that we have moved some products from Germany to France, but there's actually nothing to pay. This is used for Intrastat reporting. So this is it for the first part of the process, which is doing the stock transfer order. So this is the interesting part. Now the second part is a standard sales order where we are going to sell from our plant in France to our final customer. But it's also interesting because in the company code of Germany, we are going to insert the shipping plant as France. So let's do this together. Now I'm going to switch to the transaction to create a sales order /n VA01. This is very similar to all the order to cash demonstrations that I have done on the channel. So we have a standard sales order, then we have our sales organization AG10, distribution channel 01 and division 01. So this is the sales organization assigned to our German company code, right? But then inside the sales order, we're going to say that we are shipping from France. So here I'm going to press enter. And here is the final customer number. So this is my final customer. And then we insert a reference, demo test 1, 2, 3. We insert the material number, desk M1. The quantity is 1. And here if I go to the conditions inside the item, we can see the price 700. So this is the selling price. I'm selling to my final customer. So the item has a cost of 500 and I'm selling for 700 to get a margin of 200. And then we have the output tax of 15%. This percentage and this condition can be changed as required by the regulations. This is just an example. So here we can have 20%, 10%. It depends on the business requirement. But we can have, so this is the output tax condition that we have for our final sale. Then let's go to shipping. This is very important. Here we have the plant is AG11, as you see. So this is our French plant. And we have the shipping point G001, again automatically determined from configuration. This is all what I wanted to show you here. So let's save the sales order and move to the outbound delivery. So the outbound delivery for sales order, we already know it from the different demos that I did, is /n VL01N. So VL01N. Here we have our shipping point, and this is the order number, enter. Then we choose the picked quantity. So delivery quantity is 1, picked quantity is also 1, and post the goods issue. So now we have posted the goods issue. Let's display the accounting document. It's a very standard goods issue accounting document. Let's have a quick look. So here we have our history. Go to the material movement, display document, FI documents, accounting document. And here we have our entry, which is a credit to the inventory account and a debit to the cost of goods sold account in company code AG10, but they are both linked to the plant AG11. So at any point of time, we can always generate reporting to see which plant is generating this cost of goods sold or this entry, and we can also see all the impact on our trial balance on company code AG10. Now let's go back and post the billing document. So this is the final step, the final customer billing document. So the transaction is /NVF01. Here we have our outbound delivery number. So this is a standard billing document. I'm not going to choose a billing type. It will be determined automatically as F2. Enter. And here we have our item. If we check here, we can find the conditions. So we have the price, the output tax. Now let's save and display the accounting entry. So display billing document, accounting. I'm just showing this for the sake of completion. We already know how all of this works. So here we have a debit to our customer. So accounts receivable for the revenue plus the value added tax. And we have a credit to our revenue for 700 and output VAT credit of 105. So this is the 15%. And as you see here, this revenue is assigned to our plant AG11, and the tax code is for France. So whenever we generate the value added tax reporting for France, we are going to find this line, and it's posted in company code AG10. And this is it. This is a very nice proof of concept. So now we see a standard plants abroad process in SAP to sell a product from Germany to a final customer in France. We can see the accounting entry that happened when we did the stock transfer. We see also the final accounting entry that happened when we did the final sale. We also saw the value added tax reporting and how the different lines appear there. So we can use this as a base to prepare all the different reporting we need for value added taxes and Intrastat for both Germany and France. This solution can be used in any country that's in EU. And this is it. This is one of the most interesting processes I have worked on, mainly because it's related to EU regulations, and I was never exposed to this before coming to France. Now that I'm in France, I need to learn these things because we use them actually in projects here. So it's a very interesting process, the plants abroad. I hope that I was able to explain it in a nice way. I hope that you understand all the different business process aspects and all the different system aspects. In the demo today, I showed you all the different steps, but I have not shown any configuration steps. This would take a full other playlist. You can find all the configuration details in the configuration manual and you can follow them. Also, if you would like to demonstrate this process to your customer or test it yourself or test any other processes, then you can request access to my SAP S/4HANA 2023 server, this one, and you will be able to find exactly the same master data, the same company codes, the same plans that I'm using. And you'll also get access to the Slack group that I use for the channel members. So you can chat with me and the other members. As you see here, there is power in the community. We actually support each other and we help configuring different processes. Do not hesitate to leave me your comments. Let me know what are the other topics that interest you. What else should I talk about in the value added taxes playlist? And above all, do not hesitate to argue with me and ask me difficult questions. I actually want to understand this process more, and by arguing with others, by debating and by answering difficult questions, this is actually how we understand the system and how we grow together. So do not hesitate to tell me that this process is wrong or it has limitations or that you have done it in another way in your project. Do not hesitate at all. It would be very appreciated and very useful. And if you need help implementing this process in your project in EU, then do not hesitate to get in touch. You can either go to my website, www.galalconsulting.com, and fill a form, or you can simply send me a message on LinkedIn and I would respond. Thank you for watching, and I'll see you again soon.